So hi everyone, welcome to Investing with Dhan. Very excited to have you guys over here today. Uh, we have a very interesting guest with us, and the topic of the conversation is going to be very interesting. This is one topic that I personally really like, which is how Indian consumption is changing. Speaking about Indian consumption, मतलब 20 साल पहले people would aspire to do one thing, and India as a society is very aspirational. हमें आगे बढ़ना है, हमें ज़्यादा कंज्यूम करना है. Every household wants a better living for themselves. That means improved standard of living, better future for the kids, better education that will give the kids a velocity for a better life. And what we think is Mirae has been a pioneer in the idea of consumption. Starting with the first consumption-based fund that they launched many years back. So I think the perfect people to speak about Indian consumption would be Mirae, and we have a very special guest from Mirae Assets, that is Siddharth Srivastava, who is going to talk about the Indian consumption story. Yes, over to you, Siddharth.
Yeah, thank you so much for having me on this cast, and happy to talk about this very evergreen theme, and especially a sub part of it now, right? Because see, what is happening in India right now is first, if you look at our demographic, we have been very lucky because our demographic dividend is real, right? If you look, our median age is around 28 years. We are going to be the largest, youngest population, and that demographic dividend is expected to continue for next 40, 50 years. So you have a huge consumer base, right? But what has also sorts of changed is that in last couple of years, our GDP has been growing at a pretty reasonable pace, right? We can always debate about whether 6.5, 7.5 is something which is ideal for India, and yes, there have been hiccups like in quarter two this year where GDP growth has been disappointing, but a long term trend is something which is sorts of very positive, right? Around 7% or so. But that has resulted in our per capita income rising. For example, in FY18, our per capita income was around 1,37,000, which in FY23 from 1,37,000 has increased to almost 2,10,000. Now, so we are roughly around 2,600, 2,700 USD per capita. And globally, what has happened is that once your per capita GDP rises above, let's say, 2,500 dollar per capita, the discretionary spending starts increasing. And that is something which has been historically observed in developed markets, and which is something which we observed in emerging markets like China. Because whenever anyone earn, or whenever we talk about household spending on anything, first is on basic necessities, right? Any person, any household will first invest on or spend on getting food items, right? Food is the basic necessity. But as the income in hand increases, you will more and more start spending on discretionary items like going to a restaurant, right? You will start traveling, you will start buying, let's say, better clothes, you will start buying two-wheelers, four-wheelers, and if you have earning more, then probably a more premium two-wheeler or a four-wheeler, right? You will start going on an e-commerce website to buy apparels, beauty and personal care products, etc. And this trend has increased significantly post COVID. What has happened post COVID is that because of this entire digitalization, because of very low data cost and access to 3G and 4G services, even tier 2, tier 3, tier 4 cities have access to opportunities. Anybody in a tier 2, tier 3 city can go ahead and buy any aspirational item, right? 10 year back it wasn't possible because you won't have a brick and mortar store in a particular area. But all this that is open now. Just look around your own house or your own society and see how the consumption pattern has changed, right? Almost everyone is buying on e-commerce website. Almost everybody is using 4G services. Everyone is using fintech platforms or digital payment platforms. Almost just look at how well tours and travels, uh, uh, people ordering food online, etc., uh, has increased. So that is one significant shift we are seeing, right? So your private consumption from 56 trillion rupees in 2012 has increased to almost 176 trillion rupees in 2023, which is a significant growth. Just there's have been a recent study where the study was how many people can spend as a consumer 1,000 rupees per day, right? And we already have around 53 crore population who can spend on consumption around 1,000 rupees per day. That is expected to rise by 46% to almost 77 crores, right? And we'll be just behind China, who by 2030 will have around 100 crore people having that spending appetite. But India is second to only China with growth rate of almost 46% compared to growth rate of 15% in this segment. Also very important is how our household income makeup is also changing, right? There was a study done which talked about household income, and in 2005 households which were having a total income of, let's say, around around less than 3 lakh were around 69%, 70%. So more than two-thirds of your households were only generating less than 3 lakh income or having 3 lakh income. But if you look what is expected in 2030, from 2005 to 2030, that share of low income household which are getting less than 3 lakh from 70% almost is expected to go down to 15%. And similarly, your lower to mid and upper to mid household composition, which are earning anywhere from an income point of 3 to 6 lakh and 6 to 30 lakh, that as a share will increase from 30% in 2005 to almost 77-80% in 2030. And same thing, if you look that percentage of affluent households, which is typically households having income anywhere between 10 to 20 lakh, roughly around that range, as a percentage of total household from just 4% in 2005 has increased to almost 16% in 2023. And very important trend that consumption from tier 2, tier 3, tier 4 cities, their share was only 20% in 2005. That's increased to 34% uh, right now. So, as a consumer, there are very interesting trends which are happening right now. One which I'll also talk about is this is something which sorts of is evident both in urban India and in rural India. For example, there was a household consumption survey which was done this year, in March 2023 ending, and in urban population, the spending, the wallet share, which in 2000 was almost 46, 48% on food item, that dropped to almost 39% on food item. So basically in urban India, now almost 61% of spending is on non-food items, which was around 50% 20 years back. Similarly, if you look at rural India, that is also surprising that rural India used to spend almost 60% on food items in 2000, that has dropped down to 47%. So almost half of the wallet share in rural India right now and 60% of wallet share in urban India right now is spending on basically non-food items. And why that is happening, I think again, just look around and see how significantly the consumption landscape is changing, right? By 2025, we expect around 70% of population to have internet access. We expect around 60% of population to have smartphones. We expect around 50% of population to have access to online services like online banking, payments, recharge, etc. And we expect around 25% population to do online shopping, which is a significant increase in last 4 5 years. So while we talk about FMCGs, staples, etc., when it comes to consumption, and most of the active funds talk about FMCG as a core allocation when it comes to consumption segment, but I think with rise in per capita GDP, which is around 26 2700 right now, we expect it to be 48 4900 by 2030. So we took around significant amount of years, almost 70 plus years to arrive at a 2500 600 per capita GDP, and we expect to add almost 2000 per capita GDP more in next 6 year itself. So as the per capita GDP is rising, as you are seeing the share of lower to mid and mid to upper households rising, household income increasing, people having access to all these digital platforms, convenience, etc., people becoming more aspirational. I think the story right now lies towards discretionary consumption more than the staples consumption. And I think anyone who want to look at consumption space for next 5, 10, 15 year, I think the majority of growth in terms of revenue, size, etc., will happen on the discretionary side.
That's very well, Siddharth. What one thing that you were speaking over here was like how tier two, tier three, tier four cities are consuming more, and with the availability of e-commerce, fintech, they're using all those appliances. There's a I think about 1.5 year back, one study came back which said that 70% of iPhones in India are actually bought on EMI, and out of the 70%, 60% to 65% were actually purchased in tier 2, 3 towns. So it's not tier 1 that is consuming more. And what I've also realized is that as Indians, we are aspirational. Like, अगर हमारे पास 100 रुपए जेब में तो we want to buy a car that is 300 rupees. We want to do that, and फिर उसके लिए हम वो जुगाड़ करते हैं. We take loans, we figure out cash, we borrow, we break our savings, and we get that just to. We have always been a status quo society, so I think
I think,
consumption plays a
think the
very
best
important factor.
example is just look at how quickly the market share of SUVs within four wheelers have increased. So
Correct.
not
Correct.
only people, while Q2 number for four wheelers have been not very encouraging, but if you look at a long-term trend, four wheelers are something which are increasing. But just look at within that premium segment is increasing. Just look at how strongly the Apple market share within the premium phone segment, like you mentioned, is increasing. It's now almost 6% with sub 1% 4 5 years back. So not only discretionary spending is increasing, but people going for premium item is also increasing. And that is obviously a lot of credit goes to how easy it is for people to access those opportunities set and how easy fintechs have made for people to buy items on credit.
That's true. That's very true. Matlab, the whole boost in Indian consumption has been enabled by easily access to credit, and that is obviously a feature of the infra that we have built over the last, say, a decade, which is the Jam Trinity, the Jan Dhan Yojana. We have Aadhaar, we have now UPI as well. So entire landscape has changed consumption wise in the last 20 years, and more so in the last 5 years, because in the past 20 years people were consuming more. Now from the past 5 years the premiumization has increased rapidly. If you just look at D2C brands, premium D2C brands and premium products from, say, a traditional brand as well, a traditional FMCG brands as well, are selling out more faster than, say, a more staple product like you were mentioning. uh, and now obviously there is the wedding season going on. So there is a lot of discretionary spending happening there as well, and that is a major boost to consumption. What I wanted to ask is, how is this fund different? Like, how is it structured in a different way from any other consumption fund that are out there?
Yeah, so it is completely different to any active or passive fund which is out there, because typically other funds look at the entire consumption landscape and they will typically have a higher proportion allocated towards FMCG companies, which are staple companies like HUL, ITC, Procter and Gamble, etc. So, for example, if I am looking at active consumption funds, around 30% allocation on an average is towards FMCG.
Mhm.
If I'm looking at India consumption passive fund, which has around 30% again allocation towards FMCG. Active funds also have allocation towards banks, because it depends on fund manager. He can think that even banks, etc., are part of the consumption story because they are fueling the credit, etc. They also have exposure to a lot of these B2B companies, also typically like auto ancillaries. You have Asian Paints, etc. But what we have done is we have solely focused on this rise in discretionary and aspirational spending. So our fund will not have, and this index will not have exposure to any FMCG company. So it will not have exposure to HUL, ITC, etc. It will not have exposure to any B2B consumption companies like auto ancillaries, paints, etc. And it will solely focus on your discretionary spending. So whatever I go and typically buy after my basic necessities on food items have been taken care of, that is what you will include. So for example, uh, we'll have exposure towards consumer services, which includes your food deliveries like like Zomato, etc. Then we'll have exposure towards e-commerce, retails like Trend, hotels, pure play auto players on four-wheeler and two-wheeler segment. Then consumer durables, white goods like Titan, Dixon, etc. Then reality also, right? Because once you, what is the thing, almost final spending you do on the discretionary side is buying a good house, right? So we have almost 11 to 20% exposure towards reality segment, which is doing so well, right? Because people have more money in the pocket, and we are seeing reality having 14-year lowest inventory right now, and very robust growth. And then, like you mentioned, almost 10% exposure towards fintechs, because those are playing very important role in fueling the growth towards stockbroking and wealth management, right? Because again, people are spending more and more or investing more and more on these platforms. Then telecommunication, which is very important as a base to do all these digital transactions. Then textiles, media and entertainment, and airlines like Indigo. So we have everything which you typically think when it comes to discretionary spending, right from e-commerce, food delivery, fintech, to white goods, reality, four-wheeler, two-wheeler, textiles, etc. So this is a different portfolio which focuses on what we believe is going to be a significant rise in discretionary spending in India over a long term.
Understood. Understood. So a question from the investor side of from investors point of view as well. अगर किसी को ये fund में invest करना है, should they go the SIP route? Should they invest in a lump sum format? What would be beneficial for them, given the risk horizon and also like the time horizon? Say, if hypothetically an investor is investing for 3 to 5 years, that is the time horizon that they are taking.
I think SIP is always the best route. I think markets are volatile right now. SIP will help you sorts of average out your acquisition price of fund units, right? So SIP, especially in volatile times, are very good, right? But if you are looking from a 5 year horizon point of view or 7 year horizon point of view, then even a lump sum transaction with markets which have corrected reasonably in recent time, I think at these levels also, from a 5 7 year horizon point of view, even lump sum makes pretty much sense. All I'll say is that uh, if you are looking only from a 1 year horizon point of view or a very short term punt, then probably this fund right now is not for you, because we might see some volatility in the market, especially what is happening within India and globally also. So invest from a long term point of view. 5 years is a horizon. SIP is preferred, but even if you're thinking about 5 7 year lump sum is also pretty good with the recent corrections which have taken place.
Okay, understood. But a last question and then we'll end. You can tell when the NFO is closing, so the investors are aware. That's it.
Yeah. So NFO for ETF actually closed today. So anyone who wants to buy ETF, he or she can invest in this NFO today itself. We also are launching fund of fund also, because some people are more comfortable in the mutual fund route, and since the taxation is same, I think there's no particular difference apart from a bit of a higher expense ratio. And that fund of fund will close on 26th of December, which is a day after the Christmas.
Understood. Okay. I think we'll wrap it up over here. That was a very insightful session, Siddharth. And the Mirae Asset New Age Consumption Fund is available to invest on the Dhan app. If anybody who wishes to invest can log on to the Dhan app and can invest from the Dhan app or also from any other channel, whatever they feel comfortable. All right. Thank you so much, guys, for joining in. Thank you so much, Siddharth. It was a
Thank you
great.
so much for having me here. Thank you. Bye bye.